All right, we are live. Welcome to the live stream. Got a subscriber overnight, so that's pretty cool. Hope you guys are all doing good. We have a lot to analyze today. Today is a high probability day. We have NFP coming out. Actually, it already came out. It looks like we don't have a data wick. I mean, there's this, but I don't know if I would consider that data lows. Anyway, all of our news came out. We had average hourly earnings, non-farm employment change, and unemployment rate all came out. Hopefully today should be a high probability day. It's NFP, so hopefully it should be high probability. So we will just have to see here what we get. But yeah, we'll just have to jump right in the charts and do the best we can. Because, I don't know, every day I come to the charts, I'm so stressed out. I'm, not stressed out, but I'm I want to take a winning trade today. But I just have to realize that at the end of the day, all I can do is take high-quality setups and take the best setups I can. And if they don't work out, then so be it. Hey, what up, Harry? I just have to take the best setups I can and just be disciplined, take the best setups, and if they don't work out, that's just part of trading. And so I feel like, oh my gosh, I'm stressed. I want to make sure I get a good trade in, but you know what? That's not the mindset I need to have. The mindset I need to have is I'm going to focus on taking the best possible setup that I can take, doing the best to analyze the chart and the best that I can, and then letting whatever happens happen. And if it's a losing trade, so be it. I'm going to learn from it. And so that's the way I'm going to go into the market today, and that's the mindset I'm going to try and have. So I hope today can be a good day. I really do. It should be high probability today. So we'll just have to see. But I'm just getting my trading software up right now. Almost ready. Yeah, exactly. It's it can feel kind of stressful because I'm I want to get better at this so bad, and I know I have the skill sets because every single day in my market recaps, I'm calling out 5 to 6 profitable trades you could have taken. It's just a matter of actually catching them live, and it just comes with time. I know I'm so close, so I'm just man, I want it so bad, but I just have to have patience. I have to just do the best I can, take high probability setups, and we'll see where that can take us. So let's jump right into the charts. So yeah, got my software up here. Okay. So yeah, I don't think we have, personally, I believe, oh, you deleted it. Okay. I don't know if you would consider this a data wick. Probably not. It's probably a lower probability because, yeah, there's no real wick here. So, okay, let's take a look at the chart here. So, at first glance, let's draw our sessions. So we have 20 until midnight. Okay. 20. And we're going to try and figure out what kind of daily profile this is as well. So 20 until midnight. And as always, I know that I'm feeling more confident with these breaker block trades. I'm feeling more confident with these TGR style trades, but I will only be sticking to inverse or value gaps probably at least for the next month or so. And then maybe in a month I can reevaluate if I'm really good at catching these breaker block trades in real time, and if I'm really good at catching these TGR type trades in real time, then in about a month I will probably start to trade. I will include breaker block setups and I'll include TGR type setups in my trades. But for now, I really want to stick to one model and master the one model, which is inverse for value gaps. Because if I just start jumping around and trying to do 3 models at once, if I haven't mastered one, it's going to set me back. So just going to dial in and focus on inverse for value gaps because I really do think it's one of the highest probability models out there in the market. You can go watch Dodgy Trade live. He has like an 80% win rate with inverse value gaps. You just have to know how to trade it. So I'm the same way. I'm great when it comes to the recaps, but the live market, yeah, exactly. Like, but I know that like with every recap that you do, you get a little better. Like you really do. And so it's just a matter of actually becoming really familiar with that signature and price, so that way when it's happening in live time, you're like, oh, I've seen this before. I've seen this before 5 times. I've seen this before 10 times. I know exactly what the market's gonna do here, and then at that point, you're just able to execute. You know, so that's the point where that's where you want to get to by doing these. So when I do my market recaps, you probably want to do your own market recap first, and then go to my market recaps and say, did I find these same exact trades that Jake found? And you find the trades on your own, and I think that will help you get so much better. Yeah, I think funded accounts are one of the best ways to go about trading, because you don't want to lose your own capital, right? You want to have a prop firm. So I definitely recommend using a prop firm, because otherwise it's you only pay the fee, and then you only out the fee for the funded account if you're unprofitable, versus if you use your own money, then you lose all your own money. So it's just not as it's just a lot less risk and a lot more reward for your average person. So Asia, London. This is weird. What kind of daily profile is this? What the heck? Asia and then London. So this is so interesting. Asia did this, and London formed a tighter range. So, okay. You know what this could be? This looks like an accumulation range. It really does. Like why did London get even tighter like this? Like, why did Asia go like this and then London get even tighter like this? I don't know. I would honestly maybe consider this a data wick. Yeah. I'm gonna mark this out. Actually, I'm not going to mark it out yet. I want to really get an idea of the bias first. I want to know if we have like equal highs or something. Because if we have equal highs, then I want to be bullish, right? I mean, it looks bullish. The chart looks bullish. So I just want to be really thoughtful about this. So yeah. Anyway, Asia and London form this tight range. This is very interesting. Let's look at our daily profiles. So I'm going to pull up T-Trade's daily profiles. Yeah, I have. I'm going to make a video on this actually, and it very soon. But I have like this thing where it's like it's like my top 5 draws on liquidity, and you really want to use one of these 5. To frame your trade. If you use one of these 5, it like makes your trade automatically like either an A or an A+ setup. So the first one is equal highs or equal lows. So you want these basically as your take profit for the trade, right? Data high or data low. Previous days high or low. Session high or low. And previous session or previous week's high or low. If you have one of these 5 as the take profit for your trade, it's just like it's like a giant magnet. It just runs right through them. It runs right through them. I mean, go back test this on your own, figure this out for yourself. But these are like they're giant magnets. So like, it makes you like, you don't have to be as skilled, honestly. You just kind of just like you get your entry and then the market just flies to these because they are such strong liquidity magnets. So previous weekly high or low, and I'm gonna make a video on this, but these are my top 5. If you have one of these 5 at the end of your trade, it just makes your trade so much higher probability. So those are my recommendations for like how you frame a draw on liquidity. Okay, let's turn on the equal highs and equal lows. Okay, it's on. Equal highs, equal lows. So I think there's not any equal highs or equal lows. Let me know if you see any equal highs or equal lows. But I'm really trying to be very thoughtful about this right here. I'm really trying to be very thoughtful. Yes. Yeah, these five draws on liquidity are all very high probability. The market loves to run through these. So if you have these as your take profit for your trade, you're going to have a higher win rate. So for example, like if I pull up the previous daily candle, so I'm going to actually mark out previous, let's see. See, I don't know if I want to mark out this because this isn't necessarily, the market looks bullish right now, so I wouldn't mark out that. But maybe I'll mark out this swing high. So I'll just mark this out. This could be a possible daily. I'm just gonna mark out this daily swing high. This could be a draw on liquidity. And then let's look for SMTs here. So if I go down to the 1 hour chart, 1 hour chart. Now this, I feel like this seems like trendline liquidity. So I feel like at some point we might come back and run that, but I just don't know when. So it's just one of those things. If you don't know when, you have to have a win. You can't just have a where. You have to have a win as well. So so yeah, let's just look for SMTs here. Let's try and be really thoughtful about this. So it looks like we had an SMT at these lows here. So we had Tuesday at 11 o'clock, Wednesday at 10 o'clock, and we had Tuesday at 11 o'clock, Wednesday at 10 o'clock. So we had an SMT at these lows. So this was the bottom. This was the bottom of before this up move, clearly. So you could have probably assumed that NFP was going to go up. You would want to know some other information as well, but this SMT happened, and then we obviously had this up move here. So that makes a lot of sense, right? So we had this SMT. Oh, yeah, I'll explain SMT. So I have a video on SMT, so if you want to learn more about SMT, definitely go watch that video. But SMT is just when you have two assets that are correlated that have a break in correlation. So for example, the Nasdaq and the S&P are two correlated assets. So this is when you have the Nasdaq make a higher low. You can see here the Nasdaq made a higher low, and the S&P made a lower low. And you have to use the same lows. So if the S&P makes a lower low and the Nasdaq makes a higher low, and this happens at a key level, that is a SMT. And basically, it's a sign that the market's going to reverse. So, but it just gives you validation that if it happens at a key level, that the market is probably going to have a reversal at that key level. So we have a low and a lower low on the S&P, and then we have a low and a higher low on the Nasdaq. So hopefully that makes sense. since this happened at the lows here, this and this also probably happened at the bottom of this weekly fair value gap. So that was the key level that was the useful for the S&T. So we had this weekly fair value gap, and if I go back down to the lower time frame, you can see this SMT happened at the lows of this weekly fair value gap. You see, right? This low and this low happened once we filled this fair value gap. So this gave you confirmation that this weekly fair value gap was going to be respected, and then we went back up. So it basically just gives you confirmation. When it happens at a key level like this, at this weekly fair value gap, it's confirmation that this area is going to be respected. So anyway, this daily swing high very well could possibly be the draw on liquidity. I'm trying to figure out what else could possibly be a draw on liquidity. Maybe this 4-hour high. Yeah, I use market maker buy models. It's market maker buy models. Everything is kind of knit together, right? So like a market maker buy model, and like everything that's ICT is tied into everything. So a market maker buy model, this is a market maker buy model right here, right? Because we had SMT at the lows of this weekly fair value gap. So this is the bottom of this market maker buy model. So right here, you see we had the sell side of the curve, and then we formed an SMT at the low inside the weekly fair value gap, and now we have the buy side of the curve. So this is actually kind of helpful because now we kind of understand, like, hey, this is probably a market maker buy model. So we probably have maybe this previous, what is this? Previous week's high as possible draw on liquidity. So you actually kind of just helped me there a lot, because clearly this is a market maker buy model. I mean, this is very obviously a buy model, right? Because we had an SMT at the lows of the weekly fair value gap, and now we are delivering back to the upside. So yeah, I'm just going to keep being very thoughtful about this before I jump to any conclusions. So yeah, this is a weekly, a weekly swing? Yeah, this is the previous week's high. So this is a possible draw on liquidity as well. So let's mark this out. Just be thoughtful about all of our options for our draws on liquidity here. Yeah. I'm glad I've been helping you. That's awesome. Previous week's high. Okay. So we're just marking out all of our options. We're not going to necessarily come to any conclusions quite yet. We're going to be very thoughtful about this. But yeah, very possibly this could be a market maker buy model. I mean, it sure looks like it. We ran this sell side, and we bottomed out in this weekly fair value gap. We got an SMT, and now we're delivering back up. So it seems very possible that this is a market maker buy model. Did we also have let's see here. You could maybe say this is some kind of order block here, because this is like the final move down before the move up, right? So we're getting a reaction out of that as well. So this is not just a weekly fair value gap, but this is also this order block which swept out this low. So that's something else you could consider maybe. I don't know how much weight you put into that, because it's not exactly all red candles. There's a green candle in here, so I don't know. I'm not so sure about. But anyway, let's go back down to the lower time frame and figure out what could possibly be going on. So this right here, this gives me like this is a liquidity void. This is like gives me liquidity void vibes. So liquidity voids are essentially when the market it like has this like instantaneous dump where it dumps like a whole bunch of points all at once, and it's different than a fair value gap because it happens a lot more aggressive and a lot faster. So this is more of a liquidity void, and the difference between a void and a gap is void, the market actually tends to come back and go fill liquidity voids. So that's the difference, and so you can see that we came back up and filled this void here. But now I'm wondering if this is a liquidity void too. So I don't know. I'm just gonna be very thoughtful here. I need to be very thoughtful. So market structure. I guess from a market structure point of view, right? A market structure point of view, we are clearly bullish. The 4-hour will close bullish in 49 minutes. And it does look like this swing high could be the possible draw. So, now that we have all that marked out, let's go down the time frame here. Let's really be thoughtful about this. Let's see here. What else should we mark out? Oh, shoot. Whoops. Let's see if there were any other SMTs. I don't know if this probably wouldn't be helpful, but I just want to mark everything out. It's just nice to have everything marked out. So very possibly this could be okay, let's go look at T-Trade's daily profiles. This is where we're gonna go next. We're gonna look at our possible different daily profiles. Yeah, that sounds good. I'll see you when you come back. Okay, T-Trade's. So the only ones he has made right now are London reversal, New York reversal, and New York manipulation. So I'm trying to figure out which one of these could it be, or maybe it's. I feel like it's none of these. Maybe I feel like it might be New York continuation. Okay, I'll show you the different examples. So we have New York manipulation, where New York manipulates into key level and distributes. I don't think it's that. I mean, this is just too much of a move higher. Maybe it's New York. Let's keep an open mind. New York reversal. London reversal. It's not London reversal. I feel like it's none of the above. I think it could be like a New York continuation day. So I think maybe when the market opens, we could possibly get like a Judas swing, and then we could get our entry somewhere after market open. I think that's maybe our best bet. Like, it's probably a New York continuation day, since this is a giant market maker buy model, but I'm just going to be really thoughtful about this and keep really considering all of our options here. So this daily swing high is possible for draw on liquidity. Yeah, I think this is the most obvious one. So now if I go down in time frame, we need to figure out. Wait. Gotta keep analyzing. Let's see if there was an SMT at these lows here. Maybe like there was a low time frame SMT. I'm curious. Oh, my screen's lagging. Okay, so I'm on the 15-minute chart now, and we had a lower low here, 3:45 and 11:20, or no, 3:45 and 12 o'clock. And then we had a higher, so we had another SMT on the low time frame. Right here. So this was another SMT where we had a low, and then a higher low, and then a low, and then a lower low. So 13 o'clock, 3 o'clock. 13 o'clock, 3 o'clock. So we have another SMT right here. So there's two bullish SMTs now. At least. So we have this hourly SMT and then like probably like this 4-hour SMT. So like that's an additional confluence that we could be going up. So I think this daily swing high really does seem like a pretty good target. Okay. But let's be thoughtful about it. I'm not gonna jump to conclusions yet. I'm just gonna get more information. So okay, what else can we mark out? What else? What else can we mark out? You can maybe mark out this. Move down. And then we could use standard deviations to figure out where it could be going. So we have this 2 to 2.5 area. Okay. Okay, let's use this down move as well. I made a video on standard deviations today, actually. I would actually maybe use, so yeah, the 2 to 2.5 area is right above this daily swing high. Okay, that is very interesting. Get rid of this one. So I think it makes sense to possibly have some kind of manipulation down and then distribution back up in the 10 a.m. hour. Makes sense to me. Now, the silver bullet model is the first 5-minute fair value gap that forms between 10 and 11. You take that to the very obvious draw on liquidity. So we'll also keep our eyes out for the silver bullet model. Okay. So next we gotta figure out where's our I was gonna say we could maybe use our true opens, but they're all the way down here. I don't think they're gonna be useful today. Midnight open is down here. We could possibly use this. Maybe. Maybe we'll get a move back down and then a move up. We'll see. So this is the 8:30 open. I don't know how useful that will be. I don't know if we're going to come all the way back down there, but we'll see. Hey, another question I had. What is news and how does it affect us when trading? So to find out news, go to forexfactory.com. This is the best website to use for news. And you want to switch your settings to... Oh, I need to get rid of this. Hang on. You want to switch your settings so that way you only see red folder news. I need to switch my settings because for some reason I have the orange ones as well. But in general, you only want to see the news with the red folders. So these ones, and then you only want to see for US. You don't want to see the other, because you can use turn it on for like Forex and stuff as well. So the way you do that is you go to filter, and then you just click. You unclick all of these, and then you unclick all of these, and you click apply filter, and now you have only the high impact news for the week. So basically, news, despite what other people might tell you, so other people might say news. Oh, news. News. Hold on. Like other people, it's a common misconception for people to say, "Oh, avoid news because you're not able to control it." But actually, you don't want to trade right before news. But after news comes out, news puts volatility into the market. So what news will do is it will drive us to the draw on liquidity that we're already going to go to. News, you don't necessarily want to trade before news because that's just really, really risky. It's like, is it going to go up or down first, But in general, once you see some price action form and you're able to form a trade, it's actually good to trade on days with high impact news because it allows us to go to our price target, our draw on liquidity, because there's more volatility to drive us there. So news actually helps us with it makes price action move smoother, and a lot of time you're able to find higher probability setups when there is high impact news. So common misconception is that you should avoid high impact news, and it actually is. It actually allows for a lot higher probability setups a lot of the time. So this is interesting. We got looks like we got a sweep here. Looks like we got a sweep here. Looks like we just got our change in state of delivery. on the 3-minute. So this is our sweep. So we got our 1-minute market structure shift with this candle body close below. So your TJR entry would be at this fair value gap. Your TJR entry would be at this fair value gap. This would be your TGR type trade. I'm not going to take this, but I'm just showing the TGR type trade so I can gain experience with these other models. But then I would target for this, since there's not a clear the hourly lows are all the way down here. So maybe you could leave a runner for the hourly lows, but I would probably just target. I'm not sure. Anyway, the entry would be at this retracement to this fair value gap. And this is also, let me see. So high, low, high. Let me try and find the breaker block here. The breaker block. Where's the breaker block? It's kind of confusing, honestly. So your TGR entry is about to get filled. There's your TGR entry. Let me mark out the 15-minute lows just to mark them out. Here's 15-minute lows because I don't know what lows to target, honestly. 15-minute lows. Maybe I'll just target these 15-minute lows if I was doing a TGR type trade. And also, let's measure out the standard deviations of this move here. So, from this high to this low, we can see the 2 to 2.5 range does line up right at these 15-minute lows. So, this is good. This validates our bias. 2 to 2.5 standard deviation. So, this is looking good so far. Now, if we get some kind of inverse for value gap, that would be pretty cool. I would love to see some kind of inverse for value gap. Okay, we just got an inverse for value gap to the upside. Actually, we haven't gotten it yet, but we are closing, possibly going to close above. So we just hit this order block. We did just hit this order block. This was the OB, and now we are starting possibly to move lower. OB. Okay, wait. See, there's no fair value gaps that formed, which is actually really annoying, because I want to take inverse fair value gaps. So possibly this TGR type trade could work out. So we just barely tapped into that order block. TGR trade is working out so far. But once again, I'm only trading inverse for value gaps. This is just to gain experience. Oh, my computer's kind of slowing right now. So yeah, this is also like, yeah, this is a 2 minute for value gap. You can see this 2 minute for value gap. The wicks went and did the damage, but the bodies respected it. Two minutes for value gap. So I'd prefer to take a bullish trade anyways. So I'm not gonna be like upset like if we don't get an inverse value gap entry, because we're bullish for the day. And so if we can get even better entry to the upside and then target this daily draw on liquidity, that would be amazing. That would be really, really good. So I'm not upset at all. Here's this here's this -4 standard deviation, so I'll mark this as well. Could be useful. Okay, we're almost to the -2 to 2.5 area. Almost there. Oh, by the way, obviously, you would move your stop loss to break even at this internal low here. So once this internal low got taken out, you'd move your stop loss to break even here. So on this TGR trade, it's now risk-free. TGR trade is now risk-free. So we'll see if this were to hit. This would have been a 1.36 to 1 risk reward trade. $1.36 to 1 risk reward trade. Now, once again, I didn't take it because I'm not taking TGR type trades yet. But in like, I don't know, 2 weeks to a month, if I'm able to take trades like this and consistently do it, then I'll add them into my what do you call it? My repertoire of possible trades I can take. I would just scale some here just because. But I would take them off the rest probably at this low. So. All right, so you can see that trade would have worked out very, very nicely. That was a 1.3 to 1. That was a TGR type trade. Yeah, so it was 1.4 to 1. It was a TGR. Essentially the TJR style trade, 2022 model, whatever you want to call it, but good trade nonetheless. So you could obviously leave a runner for this -4 standard deviation if you really wanted to, but I would take most off here because why not? Um, I only take one trade a day because I'm trying to just be really disciplined about my trading. So I'm only taking one trade a day, and I'm trying to just take the highest probability setup I can. Um, and once again, I didn't take this trade because I was just because I'm not taking TGR type trades right now. I'm just taking inverse for value gaps, but you could have taken this. Once I get more experience in about 2 weeks to a month, I'll possibly start to include these in my repertoire. But yeah, right now I'm just kind of getting experience with them. But yeah, I take one trade a day. But I like to observe trades that you could take. And look, if you had your stop loss, above, I'm trying to think of what would have been a good place to possibly even have your stop loss. Like, I guess I'd just probably put it above the high, but like if you put your stop loss here or something, then this would have been like a 3-to-1 restored trade. So just cool that it could have been like our entry. We like it barely went even into our stop loss. You know. We didn't have any inverse for value gap here. So let's look for SMTs. Okay, I'm gonna get rid of this trade now because it's kind of just taking over the whole screen. Okay, let's just get rid of everything because it's honestly just getting a little overwhelming here. So I think we could go to this -4 standard deviation. I want to measure. I think I measured it out from here to here, but I'm gonna measure it out from here to here as well. So this is probably the next area we'll go to. We'll see though. We'll see. Because this is a fair value gap. So we'll just see how this responds. This did inverse. This 30-second fair value gap did inverse. So I expect, now that this 30-second fair value gap inversed, I'd probably expect this low to get taken. We have this fair value gap here. So this failed, but I wouldn't really take in this because what are you delivering from? You're not delivering from anything. You swept what? It's not in line with any bias. I guess yeah. It's just not a trade you would have taken. But this, you can see this failed here. This 30-second inverse did fail. I think that's interesting, but it's not high probability. It's just some random setup. It's like a B or a C setup. You're just delivering from nowhere. Yeah, you swept this high, but I mean, within the context of everything else, it doesn't make a lot of sense. So So I wonder if we got an SMT at those lows. Ooh, yo, okay. So we are getting an SMT. We're getting an SMT 930 and 937. Okay, 930, 937. Okay, 933, 937, 933, 937. Okay, so we have a SMT at these lows. After sweeping the 15-minute candle lows, right? We swept the 15-minute candle low. We got an SMT. We were on our way back up. Let's see if we have any inverse or value gaps. There's not any good for value gaps really for the most part. We could maybe take there's a 2-minute gap here. There's a 2-minute gap here. So interesting, this 2-minute gap could be holding. I don't know, there's an SMT here, so it's just like, we'll see. We'll see. So we got the macro coming up. Macro's coming up 9:50 until 10:10. Here we got the macro. If this 2-minute candle closes above, you could possibly take this. I think that would be pretty good to take to previous day's high. My computer is being so slow. What is going on? Okay, so this seems like a, wait, hang on. Okay, so this is also a 5-minute fair value gap here. So the 5-minute fair value gap, we had an SMT after going into that 5-minute fair value gap. The 3-minute candle bodies are holding it. Okay, all right. If we can get this 2-minute inverse, So yeah, so this was we're holding this 5-minute fair value gap. We had SMT at the lows. We swept 15-minute lows. We're going into the macro. We have previous day's highs as drawn liquidity. Key time for this is a Judas key time for a Judas swing. Maybe we'll get another SMT as well. That would be really nice. Like if this makes lower low and this makes a higher low, or maybe this makes a lower low. We're just gonna watch the market right now. But this seems decently good so far. And look at all this trendline liquidity. Oh my gosh. Okay, wait. 15-second inverse. I think we are gonna run up here. So when we inverse this 2-minute gap, that's probably when I'll enter, and then I'll move my stop loss to break even. Just depends on where we close, but if we close like reasonably low enough, I will move stop loss to break even here. If not, I'll move stop loss to break even here. Okay, we're getting close. Do we form any SMTs? Do we form any other SMTs? Nah, but we did have SMT at these lows after filling this 5-minute gap, which is also this 15-minute gap. It's also a 15-minute gap. So the macro is coming up, and let's see, the macro's coming up here in a few minutes. So this makes a lot of sense right now. If we come up and inverse this 2-minute for value gap, we'll just have to see what happens here. And so maybe we come down and make another lower low, and the S&P makes a higher low. That would be very nice. Could we see this happen? That would be really nice. We'll have two SMTs at this point. We'll have this SMT, and then we'd have the other SMT. But you can see this is good trendline liquidity. This is good trendline liquidity. No inverse for value gap here. Oh, my computer's being slow. So 944, 947, 944, 947. We just got another SMT right here. My chart's getting kind of crazy. Let me clear up some of this stuff right here. Let me clear this up. 15-minute low swept. We're gonna mark that out. We swept 15-minute lows. So that's important that we swept those 15-minute lows. Okay. That's two SMTs. So yeah. Looks like trendline liquidity. Okay, macro is starting right now. Okay. This is actually really bad price action. This is actually really bad price action. I don't know if I should be trading. This is actually really bad. Price action is starting to look really bad. I'm not sure we should trade this. I guess if we inverse this 2-minute gap, this is still high enough conviction for me to take. But, ugly price action. Okay. Maybe we can form a lower low here. Let's get rid of this SMT now. It's not really helpful anymore. Okay, we just formed a 1-minute fair value gap. This looks really good. This looks really good. Okay, 1-minute fair value gap. 15-minute low swept. Can we make an SMT? Can we make an SMT? That's the question. Can we make an SMT? Okay, we got possibly an SMT here. We got possibly an SMT. Oh, we just formed equal lows. Let's take those out. Okay, we just took out the equal lows. Okay. Alright, so if we can get this 1-minute inverse, I'll take this stop loss below the low. Stop. In this case, I'll just... I don't know. It just depends where you want it. You can put it below the fair value gap or below the low. What is this? Oh my gosh, this is a 5-to-1. Okay. Get ready, get ready. This clear LR right here. Okay, can we get this inverse and not close above this high? And stop loss to break even would be right here. Okay. Okay, macro, come on, what's macro doing? Okay, so we are still moving lower. Okay. Do we still have the SMT or no? Okay, we still have the SMT. We might want to go down to this -4 standard deviation. Yeah, it looks like we might want to go down to that -4 standard deviation. SMT's still here, but okay, no longer here. Okay, but look at this. We made a ton of LR. So let's get rid of everything that we don't need now. We have a lot of stuff we don't need. This was this a breaker block? I'm curious. No, this was a mitigation block. So we had a high, low, lower, high, lower, low mitigation. High, low, lower, high. Yeah, I think this is a mitigation block. High, low, lower, high, lower, low. Mitigation block right here. Okay, we just hit that -4 standard deviation. We swept out these lows into this 1 minute for value gap here, this 30-second for value gap. Okay, 1 minute for value gap. We're delivering from a 1 minute for value gap here, right off the -4 standard deviation. Okay. Okay, we're moving lower. Okay. Looks like maybe we want to go down. Dang. Okay, we might need to switch our bias. Let's just go zoom out again. Oh, we got so much on the chart. This is so annoying. I mean, it does seem like a buy model, right? But this is low. This is kind of low resistance liquidity. So is this. So we had this data low. Oh man. Okay, let's measure out this from the high to the low. That TGR entry would have been really good. Oh man. Dang. Okay, let's clean our chart up. I'm gonna get rid of everything. Did not take a trade. That was kind of stressful. Okay. So So possibly I think we could be going for London lows now, or that'll. Oh, we missed equal lows again. No, no, we missed equal lows again. No. If I saw those equal lows, I would not have been wrong about the bias. No. No. Yeah, I haven't taken a trade. See these equal lows? If I saw these equal lows, oh my gosh, my computer is so laggy right now. If I saw those equal lows, like, I would have known that we were going to come back down. Yeah, I'm just being patient, so I'm kind of exhausted. That was just kind of stressful. We still have these equal lows here. I don't know. I'm just exhausted. Like, seeing this low resistance liquidity get generated like this, and then just thinking we were gonna go up, and then just seeing us dump like that, I was like, just like exhausting. But we don't have to go to take out that low resistance liquidity right away. So, yeah, we got a fair value gap here on the 1 minute, like you said. Or are you talking about this fair value gap? Respected that. So, do we have any other equal highs or equal lows? Okay. We're delivering from here. We swept liquidity. The only thing is we're kind of far in discount now. But, honestly, maybe this is as far up as we go. Like, maybe this is as far as, I don't know. I'm gonna keep trying to get more information here. Okay. If we inverse this 1 minute, let me actually just measure this from premium to discount. I just want to make sure this. Are we about to inverse it? Oh, I think we're inversing it right now. Okay. Okay, we just tap back into premium. Of this range. So this might be actually, this could be this could be New York manipulation day. Okay. Yeah, I'll enter on this if we close. And we don't take out this. Okay. Stop loss to break even. Right there. Okay, stop loss to break even. Okay. We hit the equal lows. Okay, I'm closing off half here. I'm gonna leave more for London lows. Oh, my my position accidentally I accidentally closed because I didn't have my TP in the right spot. That's okay. On one of my accounts it closed, but I'm leaving it to go here. I have two accounts. I have a personal account and then I have this account. And I have a platform account. But yeah, this is where I'm targeting. Honestly, just depending on how we react here, like if we came back up and if we kind of, is this for value gap? Wait, let's kind of just look at this. What's going on right here? Okay, 15-minute for value gap. It seems like that's what we're reacting off of. Okay. Let's see if we can. Let's see if we hold this. Maybe that's as far down as we want to go. Okay. I did take half off at the equal lows, so yeah. Okay, I would definitely at this point. Yeah, I would have definitely exited the rest of it. I mean, I don't know, just. Well, actually, I'll just let the trade be. Okay. Maybe, maybe there'd be another opportunity if this inversed. But once again, I'm taking one trade a day, so. Not a bad trade though. Not a bad trade. It's like a 1-to-1, but whatever. A winner is a winner, I guess. A lot better trade probably could have been the inverse back to the upside here. This might be the trade of the day right here. This inverse back to the upside. Well, I'm happy about that. I took a win, and the win was actually a lot bigger on my prop firm account because it accidentally closed a little bit lower. So, yeah, I'll take it. That's a W for me. So, and it was a W for mapping out the TGR type trade right here. That was a W as well. So, 2 for 2 today. Sweet. Very cool. Nice. Nice. What trade did you take? You took a short, right? I thought you were taking a short down here. But if you hit TP, that's awesome. I'm really happy for you. I wish it would have been cooler if this was a higher RR trade. Obviously, I wanted to see London lows get hit, but reality is with these equal lows being such a high drawn liquid, such a high probability drawn liquidity, it'd probably be safe to take all off here. Just a nice little 1-to-1. Yeah, that was awesome. Used LIQ and fair value gap for your entry. Oh, did you short this fair value gap? What fair value gap did you short? Oh, this fair value gap right here. I'm glad I helped you. That makes me happy. I'm gonna text Dodgy this trade and see what he thinks. This nice little 1-to-1 trade. Very cool. Very cool. Okay, let's see what Dodgy thinks of this. Looks like we came up and swept this high, and now we're moving back down. So maybe we do want to see London lows get hit. We'll just have to see. That's why if you were taking like some kind of inverse back to the upside here, you'd need to move your stop loss to break even at this internal high, and clearly that would have saved you. But I'm not sure there was actually a setup to the upside here. I think there was just. I don't think there was a real inverse for value gap that you could have taken. So maybe this. Maybe you could have taken this. You could have taken this actually. This fair value gap getting inverse right here. Yeah, you could have taken this. And then that would have been like a really small trade, but you could have taken that. Okay, let's see what Dodgy says. You ever watch Casper SMC videos? No, I'll have to check him out. I don't know who he is, but I'll have to definitely watch some of it. Casper, I'll write that down on my phone right now. Yeah, Dodgy took this one to the upside right here that I was talking about. He took this one. That's cool. Yeah, see, this one would have been yeah, check him out and tell me what you think next stream. Yeah, I'll definitely check him out. I'm gonna get rid of this trade real quick, just so I can show you the trade that Dodgy took. So Dodgy took. There's this 1 minute fair value gap, and once it got closed above, inside right. Once this closed above, Dodgy entered here. And then yeah, Dodgy got like basically like another 1-to-1 trade. So he took this trade where this 1 minute gap got inversed, and also this gap as well got inversed. So it inversed both of these at once. So it closed above. And yeah, anyway, he entered here, targeting this high. Nice 1-to-1 trade. So sweet. Dodgy's trade. The reason that his trade was nice is because we already took out the equal lows, which were a really clear draw on liquidity. And yeah, the reason his was really nice is we were already so far in discount, right? His was a lot further down in discount, where my short, we were already so far in discount. So it was probably more, my short was probably more risky than his long. But you know what? Both were wins. So I will take the W and say next time I'm going to probably, I don't know. I think this trade was fine. I think this trade was good. I'm happy with it. Both trades were good. Okay, I'm gonna put the trade in my journal. Okay. Well, we formed more equal lows. Would you is this, you think this is considered a data low? I'd probably consider this a data low. Yo, Jonah, check out the trade we caught live on stream. It's a nice little 1-to-1 risk reward trade. Swept out these highs into this 1 minute fair value gap. When this fair value gap got violated, we entered, targeted these equal lows. Nice 1-to-1 risk reward trade. I also mapped out that you could have taken this trade, and I marked this one out live. It's pretty cool. We had a sweep of this high, market structure shift right here. And then a retracement to this fair value gap. This would have been your entry. Stop loss above the high. Take profit would have been these 15-minute lows right here. And that one would have been 1.5 to 1 risk reward trade. So that one I didn't take because I'm not taking those entries yet until I get like a bit more confidence with them. I need I'll probably start taking these TGR type trades and the breaker block type trades in like 2 weeks to a month once I'm like really feeling comfortable with them. But every day I get more comfortable with these types of trades. But right now I'm sticking to inverse fair value gaps. That's my favorite way to trade. So I'm curious, did we get... Oh, you know why this trade was even better? There was a SMT. So this was a 10 o'clock high, 10:07 high. Dang. 10 o'clock, 10:07. So when the S&P makes a higher high and the NASDAQ makes a lower high, this is called SMT, or a breaking correlation, and you want to see this happen before you get the inverse fair value gap, or before you're set up. When this happens, it's like basically it's like saying like it's a higher probability chance that there's going to be a reversal. So this formed a higher high, this formed a lower high. This 1 minute gap closed below, and then you'd enter on the 1 minute close below and target these equal lows. It is pretty cool, yeah. So yeah, 2 possible trades you could have taken today. And there was a third trade that you could have taken right here when this closed above, and then targeting this high. Thanks, bro. Yeah, price action is getting really choppy now, so yeah. After these two trades, the market's just kind of like, I'm trying to think of the word. Market's kind of exhausted. It's like we had a lot of good trades. This giant move down, so it's getting all choppy now. So I will get off in 11 minutes, but I will stay on the charts until then. I wonder if we got SMT here. Low, lower low, low, high, low. Yeah, we got an SMT, but we left these equal lows. Maybe we'll come back to those on Monday. We'll see. People see the fact that people see what, just in general, just give up on trading. Yeah, I'm gonna hop off in like 5 minutes. This price action is booty cheeks right now, but I yeah, it is kind of sad because if people did have the desire to put in the work, they could figure it out. But it does take a long time. And it does it's not easy to get good at. It's why like 1 to 5% of traders even ever turn profitable. So, but yeah, yeah, I'll get off in 5 minutes. Price action super choppy since we got like this giant move here and then this giant move here. There were a couple other trades that I spotted that I can show you. One of them was TJR's model, which I'm not taking those kinds of entries for probably like another 2 weeks to a month until I get really comfortable with them. And then another one was this inverse right here, which I'll show you. But yeah, this was super clean. We had equal lows right here. So these equal lows that were pretty far apart, so decently high probability. Then we got this 1 minute inverse. And we had an SMT at the highs, delivering from a 1 minute for value gap, sweep of this high. So I entered right here. We went straight right to the equal lows, and then I initially intended to leave runners to go possibly down to London's lows, but then once we started moving back up, I took the rest off. Anyway, other trades you could have taken were this one right here. So this was the TGR trade that I was talking about. You had a sweep of this high, market structure shift at this low right here, retracement to this 2 minute fair value gap. You enter out this 2 minute fair value gap, which is also this breaker block. So it's a breaker block as well. So it's a unicorn model. Anyway, then the target would have been these 15-minute lows because like there weren't a lot of options for your draw on liquidity since there's not really any lows in here. This is one giant fair value gap. So I just marked out the low of this 15-minute candle since that was the only thing that stuck out, and you can see we went essentially right to the low of the 15-minute candle, almost exactly. So that's why using the lows of specific candles can be so helpful. So your entry would be right here. Take profit would have been here. 1.5 to 1 risk reward trade, which was very nice. And then I'm gonna have to back test this. I'm not sure how you could have gotten entry to catch this move. Maybe you could have, but I didn't see anything. And then the other trade you could have took was the trade that Dodgy took, and that trade was the only reason this trade was not like A plus is probably like an A or A. I don't know if it was A, but it was not A plus because we were already so far in discount. You can see this price leg. I mean, we were relatively far in discount already, so that's the only reason it wasn't A plus. But we had this 1 minute inverse right here that Dodgy took. And this candle body also closed above this fair value gap. So we closed above both at once. You'd enter right here. And probably stop loss like something like that. And then take profit there. Nice little 1-to-1. So Dodgy caught that trade. I don't know why he didn't take this one. I actually kind of prefer this one personally because, well, I guess his trade is nice because we're pretty far in discount, but my trade is nice because we had an SMT, we were delivering from a 1 minute gap, and we swept a high. So they were both good for their own reasons. But I'm not sure why he didn't take this one. But yeah, that just about covers most of the trades. I think all the trades that I saw today. Like I was saying, I'm not sure how you could have entered in this chop here. I mean, to get this move down. But if you were like a crazy degen, you could have held this TJR entry all the way to the data lows, and then you would have got a 6.06 to 1 risk reward trade. So that would have been crazy. That's the only way I feel like you could have caught this move down. I don't know. Maybe there was something, but I'd have to go and really look at it to find if you could have entered in here somewhere. So, yeah, I think that about covers it. But I'll do the market recap in just a bit. Oh, okay, it's 9 o'clock or 11 o'clock Eastern. So I'm gonna end the stream here. Yeah, I'll see you guys later. Bye.